Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about the trade inside candlestick pattern, which is a highly effective reversal signal that every trader should have in their arsenal. This pattern not only helps you identify potential trend reversals, but also provides clear entry and exit points for your trades. Make sure to watch until the end as we will break down how this pattern works, how to trade it effectively, and the key mistakes to avoid when using it. Without wasting any much of your time, let's get started. So let's start with the pattern overview. The trade inside pattern, also known as the trade inside up and trade inside down, represents a sophisticated continuation or reversal pattern that begins with a harami formation and concludes with a confirming candle. This pattern offers traders a precise entry point with clear defined risk parameters. So let's start with the bullish trade inside up candlestick pattern, which is this candlestick pattern right here. It's a triple candlestick pattern, and we have a large bearish candle showing downward momentum, which is the first candle here. And the second candle is a smaller bullish candle contained within the first candle's range. And then we have the third candle, which is a bullish candle closing above the high of the first candle. So this is your bullish trade inside up candlestick pattern. So let's look at the bearish example before we look into the charts. This is the bearish trade inside down candlestick pattern. This is the bearish trade inside down candlestick pattern, which is just exactly the opposite of the bullish trade inside up candlestick pattern. So it consists of a large bullish candle showing upward momentum, and the second candle is a smaller bearish candle contained within the first candle's range. Then we have the third candle, which is a bearish candle closing below the low of the first candle. So you should close below the low, and for the bullish, you close above the high. So let's look into the charts before we talk about how to implement these candlestick patterns in your trading strategies. So this is it right here. This is the bullish trade inside up candlestick pattern. We have the first candle, a bearish candle, then a small body candle contained within the range of the first candle. Then we have the next candle, the third candle, closing above the high of the first candle. So remember, we discussed this in the example I gave here, right here. You can see this is exactly what is here on the charts. And this is another example. And you can see the first candle, a bearish candle. The second candle is a smaller body candle contained within the range of the first candle, and the third candle should close above the high of the first candle. So that is an example for the the bullish trade inside up candlestick pattern. Let's look at examples for the bearish trade inside down candlestick pattern on Intel chart on the daily time frame. And you can see the example right here. We have this bullish candlestick pattern. We have this bullish candle followed by a small bodied doji candle contained within the first candle's body. Then we have the third candle closing below the low of the first candle right here. So that is one example of the bearish trade inside down candlestick pattern. Let's look for another example. I think I have one right here. So we have the bullish candle here, a small bodied candle within the range of the first candle, and the third candle closing below the low of the first candle. So this is your bearish trade inside down candlestick pattern. So how can you use this candlestick pattern to trade the markets? How can you implement it into your trading strategy? So the key factors for successful trading using this candlestick patterns is: number one, look for patterns forming near significant support or resistance levels. Now we're going to look for key levels or key support or resistance levels before trying to trade with the candlestick pattern. In this case, we're going to look at this chart. This, we are clearly bearish. You can see this two touches. Actually, it's not just two touches. We have multiple touches right here. Have multiple touches here. Then we have the second the next touch here. So we should be expecting this to hold, this trend line to hold. But why we're expecting that to hold, we have this. If you look closely at this chart, you can see a very classic head and shoulder pattern. Here we have the left shoulder, the head, the baseline formation, the right shoulder, and for the retest of the neckline, the retest of the neckline, and the drop. This is a classic head and shoulder candlestick sorry, head and shoulder pattern formed on this chart. And when you analyze this deeper, you can see this neckline getting retested right here where we had the bearish 3 inside down candlestick pattern. So you could just take your short trades from here at the close of the third candle. Your stop loss is above the first candle, and you could just target significant support levels or support zones like this one, or you could just stick to fixed risk to reward ratio, like the 1:2 risk to reward ratio. So that's how I would have been able to take this trade using the normal head and shoulders pattern and the retest, and using the candlestick pattern for confirmations to short. So that is one way. Let's look at another example. Let's look at the second example we had here. Okay, here you can see we had this gap here. So price will be looking to come back into this gap to fill up and continue the trend to the downside. Actually, we didn't continue exactly, meaning we didn't break this structure to the downside. But if you wanted to capitalize on this bearish move, let's find out how would have been able to capitalize on this bearish move. So looking at this, you could just let's switch the line charts to get the key levels properly. You can see this support level which held once right here, and we should expect that to be support turned resistance right here. So changing this to candlestick patterns, and you can see this formation. This is wonderful, man. Now we have the bullish candle, and we have the small body candle within the first candle's range, and we have the third candle closing below the low of the first candle. Placing your short trades from here at the close of the candle, your stop losses above the high of the first candle, the bullish candle, or above this high entirely, and whichever you're comfortable with. And you could just target a 1:2 fixed risk to reward ratio, and let the profits run. You could just set your break even and let the profits run. Where those who targeted this key support level right here would have been stopped out if they didn't set their break evens. So that is one way we would have capitalized on this small 1:2 risk to reward ratio trade right here, using the bearish 3 inside down candlestick pattern. So let's look at for the bullish examples, how would we have traded this? How can we incorporate this into our strategy? Using, first, remember, the first thing is to look for patterns forming near significant support and resistance levels. So looking at this, you can see price retesting from this key level right here. We have this level. If you look at the line charts, let's make it easier. We have price reacting off of this level more often than not. Just gonna bring this down right here, and we have the second line here. So this is a key level that price has been retesting in the past. We have one here, have one here, have one here, and we have several reactions around here. We have one here also, have one here, several reactions here. So this is just a major key level. We should expect price to react to in the future. Then we have one reaction here and also the formation of our bullish 3 inside up candlestick pattern. You can see, remember the example I gave earlier, this is it. So you can just enter your buy trade at the close of the third candle and your stop loss below the low of the first candle, or you could just place it below the entire support, and your take profit could be 1:2 risk reward ratio, or you could target this major resistance level right there for a 1:2.6 risk reward ratio. And that's how I would have capitalized on this particular trade. Now if you look at this, we had a second formation of the bullish 3 inside up candlestick pattern. If you wanted to capitalize on this, you could just use the line tool to find key support or resistance level. You have this support resistance level here turned support here. At the same time, we had the formation of our candlestick pattern. Remember, this is the plan. And if you are a liquidity trader, you could be looking to use this as your liquidity and price dropping into your key level, your zone, your support level. And we have the candlestick pattern forming right here. We have the bearish candle, the small body candle within the range of the first candle, and we have the third candle breaking above the first candle. So this is a confirmation for a buy. If you need additional confirmations, you could add indicators like your volume. You could add the volume indicator, or you could just use your moving averages, or you could use your RSI to confirm overbought and oversold levels. You can see the same time we had this reaction right here, we had an increased buying volume right here. So this is a wonderful confirmation, and it shows that we should be buying this we should be buying the S&P 500 at this point in time. Let me look for that one last example before we call it a day. You can see this. Remember, the first thing is to look at the overall trend. Here you can see that we are bullish. This is a wonderful bullish trend. And if you want to zoom in, you can see this immediate bullish trend happening right here. So you could just be looking to trade and break structure to the upside here. If you look, so we are bullish, and if you add your Fibonacci from this low to this high, remember we are looking for key levels. We have price reacting off of the 61.8% level, so we are clearly bullish, and we have a key level price is reacting off of, and we are expecting to be bullish and break this structure to the upside. So looking at this, we are looking for ways to continue this trend, and we saw this candlestick pattern forming right here. So is that area a key level? You can see this resistance level right here turning to support level here. So we're just gonna change this candlestick pattern, and you can the candlesticks, and you can see this is now clear to us that this is a bullish inside a bullish 3 inside up candlestick pattern forming at a key level, and we should be looking to take a buy at the close of the third candle, and stop losses below the low of the first candle, and take profits should be at this key resistance level, or a fixed risk reward ratio of 1:2. So this is how I would have taken this trade. Is how to implement the 3 inside pattern into your trades. Common mistakes to avoid is ignoring market context. One of the biggest mistakes traders make is using the pattern in isolation without considering the broader market context. The second mistake is entering trades too early. Impatience often leads traders to enter positions before the third candle fully forms and closes. And the third mistake is overlooking volume. Trading volume is a critical factor when analyzing candlestick patterns, and a 3 inside pattern formed on low volume may indicate weak buying pressure, reducing its reliability. The fourth mistake is misinterpreting candle size. The size of each candle in the pattern matters significantly. If the candles are small bodied or have long shadows, it may indicate indecision rather than a strong reversal signal. So alright traders, you've come to the end of today's video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.